purely from a markets perspective, I think the IT heavyweights and predominantly TCS and the commentary thereof. But what we are trying to do today is talk about the two heavyweights which have come out with the fourth quarter numbers. Infosys just about managed to meet estimates. TCS has taken it a notch higher by growing across regions, across verticals. The question mark only is whether this trend could continue in the financial year. Agam is here with the answer. And Agam, if the commentary is anything to go by, and his response to Sajid's question, it probably seems that yes, they will continue to grow.
I agree, Neeraj. If they do manage to get double-digit growth, it will be the first time since FY16, and it will be a game changer possibly. But when it comes to the numbers, ahead of street expectations, how does it move or pip against Infosys? Well, it's ahead of Infosys in a lot of the parameters. So let's address those. Let's start off with the revenues. In terms of constant currency growth as well as dollar revenues, TCS is much ahead of Infosys on a sequential basis. And when it comes to the digital contribution to the overall revenue pie, again, that's largely head-to-head. TCS, or rather Infosys, just slightly higher. But when it comes to margins, while Infosys has seen much more expansion, not only on a year-on-year, but a quarter-on-quarter basis too, TCS still has higher margins. And what is more important is their outlook when it comes to FY19. While TCS has maintained that targeted margin range of around 26 to 28%, Infosys has actually brought it down by as much as 100 basis points to 22 to 24%. And this is where TCS certainly has an edge. Coming down to verticals. Financial verticals where we've seen about good 30 to 35% of the revenues coming from both the companies. Well, TCS has seen a 3.8% growth. On the other hand, well, a lackluster 0.9% growth for Infosys. It's the same for manufacturing and retail. TCS is doing much better on a sequential basis in comparison to Infosys. Two of the largest geographies where you have 80% of your revenues coming in from both North America and Europe together. While North America has seen subdued growth for both TCS and Infosys, it's Europe which is changing the game for TCS now, because that's where the bulk of your growth has come in. Do remember Scottish Widows and Nielsen and the two big contracts that have come out from Europe. And on the back of that, we've seen 6.3% growth for TCS in UK and 4.5% growth in the continental Europe. On the other hand, Europe as a whole for Infi, well, remains lackluster once again. The question really then is that it's easy to see why TCS has higher price to earnings ratio assigned by a lot of these analysts on the consensus. In comparison, Infosys at 16 times. What's really puzzling perhaps is the analyst ratings on TCS as of now, and this is after counting all the brokerage notes which have come overnight. It still has a lower rating in comparison to Infosys, and Infosys has a 9% return potential. On the other hand, the consensus expects TCS to correct by as much as 4%. But I suspect this will change after we see your TCS open, and maybe we will have some more brokerages come in for TCS. But for now, this is how things are stacked up. In terms of performance, TCS certainly has done much better in comparison to TCS or Infosys for this fourth quarter.